Okay, hello everybody. Welcome back. We see maybe a few more people have joined us. We do before the actual formal session, we do a little just a Q&A and a discussion about things, life, and tied to the apartment industry where we can. So anyways, so welcome to our first session for the year. We do these quarterly downloads 4 times a year. And today we're going to really focus on some questions. You can see them in the background here. Rod, you'll adjust this, so that people can see it. And I want to talk about, the apartment industry at a high level, somewhat philosophically, but also, specifically where I can. And so I spent the time between, Christmas and New Year watching a lot of videos about how I should make investments for the year and what I should. It's really quite confusing as to what you should be doing. But let's think about apartments first. What's good about apartments? Okay. Well, I think the first thing that's good about apartments is Canada. Okay. And while the world might be in transition, a mess, whatever, moving to something different, I think you could make this statement: Canada is the beauty queen in the ugly contest. Okay, so while things are a mess, Canada is perceived better than most places in the world. And I think that, and in a way, it has the same role as I think London, England does. You know, when the world gets in trouble, when Africa and the Middle East get in trouble, money goes to London, England. Okay, and I think that when the world gets messy, in South America, in Asia, money comes to Canada. You look at the amount of Chinese money that's here in Canada, right? So Canada, and I'm not saying our current politicians, that's not our strength, but I think our strength is our governance. A relatively stable society, not a lot of corruption, a good court system, good police, a healthcare system, good education. It turns out that I think you can actually monetize a country's reputation. That's what England has done. 1,000 years of uninterrupted rule, right? You can, money comes to England for that reason. Well, Canada is perceived well in the world. So when you talk to institutions, what institutions do is they typically bet on a country. Okay, so they'll say, okay, Canada Pension Plan or the Singaporean Wealth Fund or something like that will say, well, we pick these 5 countries that we think are going to do well. Then you pick your countries, and then within the country you allocate a certain amount of money to real estate. Let's say it's 20%. And then the usual method was we pick a basket of assets. We'll buy some office, some hotel, some retail, some apartments, right? And the general belief was that a rising tide lifts all boats. That was the philosophy that pension funds used, let's say, prior to the shutdown. But it turned out that during the shutdown, it wasn't the country that did well, it was the asset class. So office everywhere did poorly. Hotel everywhere was essentially a disaster. Industrial everywhere did well. And apartments everywhere did well, right? Now, apartments are never the number one. They're not the shining star. Like, as office, industrial can be, and they can trade places and they can be volatile. Some years hotels are the star, but apartments are consistently number 1, 2, or number 3. They're never number 5. They're never number 6, right? And so when you combine these two things, what is good about apartments? Well, the first thing is, for all of us, our apartments are in Canada, and Canada is viewed well. So tick the box off. Why do people come to Toronto and pay a 3.25 or 3.5 cap rate for a 60-year-old building? Makes no sense when you can go to Dallas and buy a brand new building at a 4.5 cap rate, right? Because of the stability of Canada. Fair enough. And so I think what's good about apartments, I think 2 things I can say that are good are the fact that we are in Canada, and the second is that the apartment class itself is perceived as stable. And that stability has many factors in it. I don't need to go through those factors. You already know why apartments are a good investment. Fair enough. CMHC financing, stability, really almost a constant shortage of them, right? We're nowhere near overbuilding and probably can't be for 10 or 20 years given the scenario we're in. So that's what's good about apartments, the fact that they're in Canada and the fact that the asset class is perceived as solid and stable and consistent, right? So what's the biggest concern about apartments as we look forward? Look, there's a lot of things that are uncertain about the world. Recession, but you know what? You're an entrepreneur, so you're used to recessions. You expect recessions, right? Interest rates up, but I would say that the greatest threat to the apartment industry, and I think most of you probably already know this, coming from the apartment industry, is regulation. Okay, so the greatest threat to our industry is the government. It is the legislation that can be put on, and in Ontario, most of you on this call are from Ontario. We've had 7 or 8 pieces of rent regulation legislation starting in 1975. And I think that I can't see that as changing in the future. You look at what's going on in the world, it is moving left, okay? And, typically left-wing ideas come from Northern Europe, Germany, Holland, Scandinavia. They kind of pickle over there, incubate there, then they come to Canada, and then eventually they go to America. That's almost been turned upside down now, right? America's experimenting with lots of centrist and left-wing ideas. It's not just Europe leading the way and so on. So I think that it would be fair to say that regulation is the greatest threat that we face. But here's the weird part about regulation. You can, if you're building a model for a 10-year IRR for an apartment building you're going to build, you can model in interest rate risk. You can say, yeah, I think interest rates might go 1% over the next year, and you can model that in and see how that affects your return or your IRR. I don't know how you model in the election of a left-wing government, right? Like there's no way to model that. It's a non-financial scenario. It's a black swan event. For those of you that have been around for a while, September 6th, 1990 was not a great day for the apartment industry. If you want to pop into the chat room what happened on September 6th, 1990, that may be interesting for what you'll say. I'll tell you in a moment. But I think that is the greatest threat. We do work in a regulated business already. Apartment rents were frozen, and you couldn't do evictions during that period. But you didn't see in other industries where Loblaws wasn't told to freeze their price on groceries, right? But yet apartment owners were. And so as we move to a more universal income, that thinking also leads to a universal rent, right? Meaning that if you're going to control this, why would you control that? Things that. So I think that's the biggest thing that we face. And I would say that Alberta has less chance of regulation because there's no history of rent regulation. Ontario and Quebec have more chance of regulation because it already exists. All you need to do is amend it, right? And even if the next government that comes into power doesn't agree with the rent regulation brought in by the first government, there's not a huge incentive for them to remove it because it's not a populist movement. You see my point? So if a government puts in rent controls or some nasty legislation, it doesn't mean that the next government is going to remove it immediately because it's not a priority for them. So it's easy to put in place. It's very difficult to take away. Let me give you an example. Prior to World War I, there was no income tax in Canada. There really wasn't any income tax. They brought in income tax to pay for the war. It was a temporary piece of legislation to charge Canadians income tax. Well, 100 years later, we've had, how many incarnations of income tax? Same thing happened to rent controls in Ontario. In 1970, brought in, and by the way, it was a temporary piece of legislation, right? And now here we are 45 years later, and we're on our 7th incarnate. So I think it's reasonable to assume that the legislation we have in place now, will change because history tells us that every 5 to 7 years, the legislation changes, right? So what's good about it? Canada and the asset class. What's the biggest concern? It's so hard to measure, right? As a developer, or as an apartment owner, you take interest rate risk, you take recession risk. That comes with the territory, right? This is a fat tail black swan event that you can't predict, and it can have an impact on prices, right? Okay, so what are the other concerns in the industry? Well, there are a few. There really are a few. I think there's interest rate risk. Interest rates are probably as low as they can go, but we said that before too, right? But if you had to bet, if I did a poll right now with all of you, I think many of you would predict that interest rates are going to go up. I think what I've heard from economists and so on is that yes, they're going to go up, but what matters is the speed at which they're going to go up. So let's say they're going to go up 2%, right? They should go up. What they prefer is that they go up 2% over a period of time, over 1, 2, 3 years, as opposed to bumping interest rates up immediately. Interest rate and cap rates are tied together, but they're not tied together perfectly. I'm writing a paper on this, which all of you will get. But the correlation between interest rate and cap rates is 0.62%. So it's not a 1-to-1 ratio. If interest rates go up 1%, cap rates probably won't go up 1%. They could go up, a part of that 1% more or less. It's dependent on more things. But interest rate is certainly a risk. Second risk is operating costs. If you're running an apartment building, you already know that now. Many of you have seen your insurance costs go up 50%, right? You're seeing utility costs go up, but I think the shoe that maybe hasn't dropped yet is municipal taxes. And when you think about a city starts off every year saying we got to raise this much money, right, to run the city. And if you can't get it from the office guys because they're hurting, and the retail guys because they're hurting, the hotels because they're hurting, you don't want to get it from the voter. One of the strongest guys out there is the apartment guy. I think in Edmonton, we'll have data on it in this report we're writing. I think that taxes have gone up 25% over the last 3 years. Remember, Alberta was in a recession before the shutdown hit, right? So the experience there is that municipal taxes, could go up. I think that the third gain, and this only affects people who are thinking of selling, that would be capital gains. Everybody knows we spent a ton of money in the world. Every government is going to have to find a new way to raise taxes. I don't think you can raise taxes on the ordinary man. And there's lots of discussion about capital gains, the capital gains exemption changing. Right now, you get a 50% exemption, right? If you make a capital gain, and I think it would be reasonable to assume that could change in the future. If you're a long-term apartment owner, battening down the hatches for 10, 20, 30, 40 years, then I don't think you have to think about that or worry about that. It's going to be what it's going to be in 10, 20, 30, 40 years. But if you are thinking about transacting in the next 1, 2, 3, 4, 5 years, I think it gives you serious pause to think about why you should consider selling now. Because if they change the capital gains exemption from 50% to 75%, okay? If you miss that by 1 day, you're going to pay a lot more tax. So it's like a retroactive tax. So if they're going to change it June 1st, you sell on May 29th, you won't pay tax. You sell on June 2nd, you'll pay a lot more tax. So it almost seems quite unfair, and it's a retroactive tax based on your 40 years of hard work. You miss it by 1 day, right? But this isn't necessarily about fairness, but that's something that I think you should keep in mind. So it's interest rate, operating cost, capital gain if you're considering a sale, okay? And then the last one is recession. Nobody knows what's happening with the economy. Sometimes you feel the economy is a little bit on the nice edge, right? But that combination, I think, is sort of the four threats to the industry. Offset all those things with a hugely stable asset class, okay? And we've always known that apartments have been recession proof. And I think we now almost can say that to a large extent they are virus proof, right? And so if there were another long shutdown, or if this became a permanent way of life, I hate even saying that, but I think apartments do well. And they've proven it in many different circumstances. They've proven it one of the more difficult times. What are some of the wild cards for the apartment business that maybe we don't necessarily think about, but just keep in the back of our mind? One would be the response to climate change. Climate change is something that everybody talks about all the time, right? And I wonder if things couldn't be put in place. I hardly understand what carbon neutral means, but if all of a sudden they change the legislation to say your apartment building should be carbon neutral. Who knows what that would mean in terms of the retrofit you'd have to do to your buildings. I would liken that to, and again, those of you that were around, September 6, 1990 was the day we elected Bob Ray and the NDP to run the province, right? Not a great day for the apartment industry. Sometimes I almost feel like it smells like September 6th, and I want to use the word smell, not feels. It smells like September 6, 1990. So, when the NDP got elected, they brought in a punishing piece of rent control legislation, but they also brought in a fire retrofit code. By the way, in 1990, there were no apartment buildings in Ontario burning down. There were no deaths in apartment buildings from fires and so on, but the government felt to take it on their own to bring in a piece of legislation that forced all apartment owners to upgrade their buildings by a certain amount of time. And that's what I feel like. A leftist government brought in heavy-handed legislation on the regulation side, but also on the physical side. We didn't expect that at all, right? So I guess what I'm saying is the wild card here is legislation for sure, but also the response to climate change. And we hear ESG all the time: environmental, social, and governance. And who knows how those things play out and how they could affect the apartment industry. I think a couple of other things to talk about. So the wild card would be climate change and ESG. The good thing about the industry is apartments in Canada, and the looming sort of threats would be interest rates, operating costs, capital gain, and the possibility of a recession. Okay, all right, Rod, let's go on to our next slide. We spent a bit of time this year, in December of last year and this year, talking about the tokenization of real estate, right? So we've all heard about Bitcoin, we've all heard about blockchain, right? And we started looking into this in a serious way in terms of how we can, as real estate brokers, transact apartments on the blockchain, and that would mean the tokenization of real estate. I'm going to try and explain this to you as best I can. But first, Rod, why don't we do a poll? We just have a question for you. Can we launch the poll? We're just going to ask you about what your knowledge of this area is. Rod?
Please continue. I'm just some technical challenges.
Okay. So the tokenization, this is a building that we might tokenize, okay? It's a building that we've listed for sale right now. It's a new building. I think it's 2 or 3 years old. It's around we think around the $15 million price range. The price per unit is relatively high because they're large units and they're brand new. And so rather than selling it for $15 million, what we could do is create, and our company would do this, we would create an exchange, okay? We would create an exchange where we would create a number of tokens, okay, that would represent a proportionate value of the building. So we could have any number of tokens we wanted to, 1,000 tokens or 10,000 tokens, fair enough? And people could buy into this building in relatively small quantities. So we bought a $50 investment in a building in Michigan. Fair enough? We could buy $50 worth of that building. We owned a proportionate share of the 1,000 or 10,000 units that were, coins that were available. So they're referred to as coins, NFTs, non-fungible tokens, right? So it'd be very interesting to know and to understand this process. And so we're embarking on this. We think maybe in the first quarter of this year, we're going to offer an apartment building up for sale. They'll be tokenized. So we start saying, okay, we understand the apartment owner. We understand his mindset. He is trying to maximize his value. Yeah, he is trying to maximize his value. Well, maybe if you could sell your building, instead of selling it to one person, okay, now you could sell it to 10,000 people. So you're selling your building retail, right? Maybe you could get a higher price by going retail, right? And so when we think about the mindset of who would buy something, that would be in a crypto or a tokenized format? Well, it would be someone who's already comfortable doing it. Okay, so as we started talking to crypto investors, this is people who bought blockchain and bought Ethereum. And if you bought it early enough, you are very wealthy today. Fair enough. If you bought it last year, you're quite wealthy. If you bought it 4 days ago, you're not wealthy. Fair enough, because it's gone down quite a bit. And by the way, one of the things I found was I had not bought Bitcoin or Ethereum, and I wasn't as soon as I bought some, I started following it. Fair enough. I don't check the price of anything, but I check the price of Bitcoin and Ethereum every day. And so that's one way to sort of engage yourself, right? And we're also going to get everyone in our company to set up, digital wallets so that they can do this, right? So what we think so far, and we'd love your feedback on this if you want to talk to us, is that the current crypto investor, the person who's maybe made a lot of money by just owning Bitcoin or owning Ethereum or owning some of the other coins, they like this space. They would like to de-risk some of their money. They don't need a 20, 30, 40, 50% return every year. They want to park their money now in a safe asset class. And what's safer than Canada and apartments, right? And so we think that the buyer for this is going to be people who are already in that space, that are using cryptocurrency, that have already made money, and now we've made it easy for them to buy it. Fair enough? So we'll still have a prospectus, a good due diligence package, environmental reports, building condition reports, and so on. But if we sell this building to 1,000 owners at, I guess, $1,500 each, right, or something like that, I think it might be a very effective way to do, to do business, and something that we're going to look into very seriously. And I think I saw someone send a text saying that you have to make it easy for people to do, right? And who said that? Yeah, Mike. Yeah, and then that's kind of what we're concluding here, is that how do you build this exchange where that can happen? And then, how do you get big enough and things like that? One way someone explained it to me, which is a good way to maybe explain to you, is let's assume that you wanted to buy apartments. You didn't want to do the work of buying the apartment, managing, and so on. Well, one option would be to buy CapREIT, right? So that's Canadian Apartment Properties, the largest REIT in Canada. It's a TSE 60 company, history, diversified, strong balance sheet, all good things. But I can buy one share of CapREIT for around $50, okay? But when I buy that one share of, and it's essentially liquid, I can trade it, any day on the stock market. But I've got to buy all 400 of those buildings, okay? But if I tokenize real estate, right, and I have 400 buildings tokenized, I could just buy the buildings that I think are going to do well. So I think hospitals are going to be busy and nurses and doctors need places to live. I can just buy apartment buildings near hospitals. Do you see my point? Or just for students, or just getting repositioned and so on. I don't have to buy the whole basket. I can buy into specific buildings at the time I choose, the quantity I choose. And if I'm a seller of a building, I don't have to sell my entire building. I can sell a fraction of my building. But I've also got liquidity. When I need more money, or one of my kids wants their inheritance, great. I'll sell 25% of my remaining shares of the building and things like that. So I think it's building this platform, it's understanding it, and we're kind of excited about it. And we'll keep you posted. Rod, if you want to run the poll now, if it's still worthwhile, you can do that. If not, I'll move on. Okay. Okay. So a couple of things that we have in development now and ready is Apartment University. Again, when I talked about earlier, what were the good things that came from the last shutdown? Well, one of them was, we always had done webinars, always done public seminars, but we converted our company during those first 3 or 4 months when things were really slow and nobody would do, into an education company. We took all that information and we codified it. We've written 14 books for apartment developers. And in the first quarter of this year, the end of the quarter, we're going to be launching Apartment University. And there's a component for developers, and there's a component for leasing agents. It's something that Rod Scholheiser, our director of marketing, has led for the last year. And the idea here is to nurture and teach apartment owners or developers to pivot to the apartment industry. There's a lot of people who have development skills. They can build hotels, office, industrial, retail. Apartments have, they've had their moment in the sun right now. And we think that a lot of people want to pivot to building apartments, and developers know 90% of what they need to know. If they're another asset class, we're going to teach them that last 10%. And there'll be information coming to you on that in the future. A couple of other events that we've got coming up. Our next event is January 18th. The first session is free, and it's the High Performance Leasing Workshop. We started doing that in 2020. We probably run it 5 times. I think we run it every quarter, and this is for leasing managers, property managers, but mainly it's designed for frontline leasing staff. Leasing is challenging today, and there's high turnover and stuff. How do you get them hired and trained? That's what we teach you, the property manager and the building owner, to do. One of the things I've learned from this is, look, there are 7 classes here. That's a big commitment for an apartment owner to make, to go to 7 90-minute classes. But if you're going to bring your staff on it, you just come to the first class or the second class. What we found is that when the owner of the company comes on, the participation rate, the rate at doing the homework and things like that, just goes up, right? Only makes sense, right? When you're kind of watching, then people are tending to produce better results. We found that another interesting thing about development, where a lot of our work is that there's quite a difference between the private apartment developer, and that's who we mainly work for, is private, entrepreneurial, self-made apartment developers. But a lot of the apartments in Canada are being built by institutional developers, the pension funds, the pension fund advisors, and so on. Great-West Life is building lots of apartments across Canada. So the institutional apartment developer thinks differently. So at Real Estate Forum in 2022, which will be at the end of November, probably the last day of November, we're going to teach a 1-day program to institutional apartment developers. And really what we're saying is, here's what you can learn from private developers. Okay. And so that will probably be, things are normal, which they should be by then, at the Metro Toronto Convention Center. Other thing we've noticed, and I would say that in 35 years of business, I've received 5 calls about office conversion. Okay. I would say in the last month, we received 5 calls about office conversion. There is a shift going on. We don't know where this thing ends up, but there is probably too much office, and there's definitely too few apartments. Fair enough. So is it practical to convert office to apartments? I've done it and participated more as on the development side of converting an office building in Montreal. It was 140,000 square feet. And we converted it to an apartment building, or an apartment building specifically designed for students, but it could have been designed just as a conventional apartment. And it was a very enriching experience for me. We participated in a number of other conversions over the years, but the question is being asked, can you convert an apartment building? Can you convert an office building to an apartment building? First thing I'd say is that you need to make more money, because this is a higher risk proposition than a greenfield site. So if you needed a 5% development yield to build a regular apartment building, right, you would need a 6% development yield or 6.5% development yield to convert an office, just because of the extra risk that you're taking. You start taking down walls, you don't know what you're going to find behind them. It's not a custom job, and you've got, gosh, in an office conversion, you might have 20 different floor plans. Whereas in a conventional apartment, you might have 5 or 6, right? But just 20 because of the way the building is shaped, and that causes lots of extra work and things like that. So we are going to run a 2-day event, April 20th and 21st, for teaching developers how to convert offices to apartments. And this is why I want to ask your help here. We are not particularly connected in the office sector. And really what we're saying is to office owners, we want you to at least consider converting office buildings to apartments for profit, and we're going to show you how to do it. So we think that this is a global problem, and we're going to have speakers from Canada, America, and Europe teach it. Here's what you could do for us. It'd be really nice. In the chat room, Rod, did you post something there? Yeah, Rod did. This icon here, if any of you be kind enough to just take it, grab it and post it in your social media and your LinkedIn and things like that, that would be really, really, really wonderful if you could do that. Okay, so stay tuned, but that's something we're going to do in April, and it's going to be 2 days, 3 hours each. There are several case studies that we have studied and looked at in the US. This topic always interested me. Who would have known the time would have come where it might make sense to take B and C office in the right location, in the right city, with the right amount of parking, the right amount of transit, and so on. But it is a very boutique type business, right? Okay, Rod, next slide. It's going to go through a couple of things that we've got going on, and then we'll wrap up. Okay. So we've actually written this book. It's ready to go, but you know it's so hard to get a printer today. Like everything that you go to buy, there's a big lineup here, right, to get stuff done. So our book is sitting there in the queue at the printer, but this is a 208-page book called The Intentional Apartment Developer, and it's a hardcover book. It'll be available on Amazon and on our webpage and so on. And we're doing pre-orders today. If you order it today, you'll get it, at a discount and receive the precursor to this book. Okay, it's called The Intentional Apartment Developer. We really saw in the last 2 years, we saw in the election, the discussion on affordable housing go to a level we've never seen it at before, right? All three parties talked about it. All three parties did not have a strong platform on it, but our conclusion is that if the government throws enough money at it, and some of it may be dumb money, right? It may not be well spent, but if they throw enough money on it, we're going to start needing to build more affordable housing. There's an opportunity for developers to build affordable housing, and we have written, this book is 80-90% done. It'll be ready fairly soon, as to how does a developer, whether an existing apartment developer or someone who has development skills, pivot to building affordable housing. There's some nuances to affordable housing that if you're a regular apartment developer, you wouldn't do. I think one of the things I'll tell you now is you'd be surprised at the returns that come from affordable housing. And affordable housing doesn't necessarily mean lower profit. It can actually mean higher multiples of equity. And also the amount of equity you need to build affordable is less, because there's more generous financing in place to incentivize you to build it. We ran this year in October. What was the first live event in real estate in Canada? We had run 11 events from 2011, I guess, to 2019, or 2010 to 2019. And then we couldn't run it for the last 2 years. We decided to run it this year. We ran it in a smaller venue, and we ran it at the Royal Military College Institute in Toronto on University Avenue. That's actually Mark Kenny, the president of CAPREIT, there on stage. And I have to tell you, what I learned from this, there was some real estate stuff everybody learned, but people were dying to get out. They really were just so happy to be out. We spared no expense on the food and the drink, and people did. And it was really a great 2 days. But the lesson that we learned from this was keep the event smaller. The one thing that developers and apartment owners love doing is meeting other developers and apartment owners from across Canada. And I was surprised at the amount of a discussion that occurred, the intensity of the discussion, and generally just the fun that people had. So we got the event scheduled at the same venue, June 16th and 17th next year. Okay. Next, this topic really interests me, and I mentioned a little bit earlier about. I'm convinced that apartment developers live longer than other people, and longevity is a new and interesting topic. And I don't think it's because they get up and exercise more. Okay, I don't think it's because they eat better either. I think it's because the mental stimulation, the intelligence, the risk, the brain power that you need to be an apartment developer just keeps them working longer, which I ultimately believe keeps them living longer. So we're going to study this, and personally, I'm studying the topic of longevity, and we'll share with you guys, whatever information, not as a business, but as an interest, because if I asked you all about the habits that you wanted to create for this year, most of them were not around your business, right? They're around your health, they're around your family and things like that. Obviously, relationships also lead to, a much, much better life. So if anybody is interested in this topic or wants to talk to me about it, or has an example of a developer who live to a ripe old age, we'd be interested in talking to you, as we expect to just study this topic and make the information available to people. Okay. Also, in terms of, Rod, the next slide, how we build our business going forward, our best ideas always come from our clients. We didn't get the idea of doing affordable housing. Clients started asking us and saying, can you run the pro forma on affordable housing? Do you have information on this? That leads us to write books, do events, and do webinars like this on the topic. So if there's a topic that you think is under addressed in the marketplace, so we're not going to do a topic on financing an apartment. There's hundreds of people that do that, right? But we would do a topic on apartments in the blockchain. Fair enough. Or we do something on affordable housing or something on how developers think. But topics that are typically not talked about, topics that require research, interviewing, and things like that. So we'd appreciate your feedback. Okay. So thank you very much for joining us. I hope you enjoyed this session. Our next session is April 5th. And we're going to do the same format. We'll get together for about half an hour before and talk about just interesting things that we might talk about if I came to your office. And then we'll have a half an hour session on a formal topic and give you a download on that. Okay. So thanks for joining us. If you remember, post something on LinkedIn about the office conversion. And it was good to see you. Happy New Year. God bless you.